All right, good afternoon, team. So Goldman Sachs, turns out Goldman Sachs was right. Who would have thought? Who would have known a possible 7 rate hikes? Remember when Goldman Sachs came out with that and they said, we believe the Fed is going to hike 7 times, and everyone was kind of like, come on. Well, Federal Reserve approves first interest rate hike in more than 3 years, 6 more coming. That's why we listen to Goldman Sachs, even though we know it's a totally corrupt operation. Listen, information is powerful. Knowledge, however, without application is useless. So if we have this knowledge, we have to use it. And this is why my expectations for interest rates have continued to be glim. Let me get myself out of the way here. Let's get into this today. This market is about to be tested. Actually, let me give you a little monologue. I've told you that the only real threat to this real estate market is if rates go up too much too quickly. There's tremendous demand. A lot of people want to own real estate. A lot of people want to buy additional real estate who already own real estate. Sorry, I got something in my mouth. And you know, we've got a situation where there's very little supply. We have tremendous demand, very little supply. Other factors coming in and messing this up, it'd be tough, but it's possible. And the one possibility is really interest rates going up too much too quickly. That is happening right now. So I want to be clear. This doesn't mean real estate's screwed. We've hit the top. It's all over. It's not what it means. What I'm saying to you is this: real estate is about to be battle tested. Now, not battle tested in like the COVID sense. Past the flying colors. Real estate crushed during that battle test. Will it during this battle test, the high interest rate battle test? There's so much demand that you could take half of the buyers away, and we'd still have multiple offers on every home, here, at least here in San Diego. So is it going to be enough to get it to the point where there's no offers on the house at that price, where the only offer you have is below list? I have heard no such stories, but the number of offers seems to be decreasing a little bit, and rates jumping pretty much lost 0.25% today, which is a little bit of an exaggeration for the fact that we only lost 39 basis points. Let's get into this. Let me get myself out the way. Do a quick plug. Derrick Evans, NMLS. 155010, VA Home Loan Specialist, a.k.a. Home Loan Specialist with the VA specialization. Call or text me if you want to buy or refi. You can also email. We'll do submit your scenario tomorrow, because today I'm not going to look at specific rates. It's just pointless. Everything's crazy. Banks repriced like 5 times today. It's complete madness. Why? Well, let's take a look at the chart. All right, so we've got this clear downtrend here in mortgage bonds, which is no bueno. We really want to see mortgage bond prices going up. Like, this was a great few days run right here. But then since then, look at what's happened. Ugh. Awful. Awful. This candle today gives a little bit of hope. By the way, remember when I said we were going to be switching over to the 3.5% coupon? That is exactly where we are. Trying to hold the line, trying to hold 100. Right now, dipped down today, down into the 100.40s, and finished the day at 100.66, down 39 basis points. But we saw a lot of really negative pricing today. A lot of that is hedging for the Fed. Today, not a good day to lock, because you're not even getting the face value of these things on a day like today. You're not even getting that. You're getting, worse than face value. You want to at least be getting face value for these bonds. But there's always a hedge that's built in. There's always a little cushion for, well, what if it really, really plummets? And especially when you're working with the market in real time, like I am as a broker, those things really, really matter. Those movements matter. If you're with a bank that's got padding in their rates, they can kind of keep them somewhat similar and just lower their margins. But of course, you're paying a higher rate for that, so that's not good for you. So when we look at this, you can see there's a clear downtrend here. Even if we get a little bit of a bounce up into here, we're probably still going to continue down, and rates will continue to go up. So we're still talking about lock immediately kind of situation. Just really, really bad formations here on the chart. Absolutely no catalyst for this thing to go higher. The Fed was our only hope, and they basically just kind of, said, hey, listen. Essentially, the Fed's forecast and their interest rate plan here are basically what they're saying is that we're willing to sacrifice growth to stop inflation. Well, son of a... Where's my buzzer sound? Where were you guys with this attitude a year ago? 2 years ago? We've been so worried about growth. We've let inflation run rampant. Now we're willing to sacrifice growth. Oh, good timing, aka terrible timing. Why don't you just... I mean, it's bad because essentially what they're doing is they're selling on the way down. You know, if you run big positions, which the Federal Reserve runs the biggest positions of them all, they have literally trillions of dollars in their balance sheet. I mean, it is hard to move that much money. If you were going to trade that much money, you had best be distributing on the way up and accumulating on the way down. You cannot distribute on the way down. You murder markets doing that. But of course, as I say that, look at what happened yesterday. The Dow was up like 500 or 600 points. Today, the Dow is up 500 points again. NASDAQ's almost up 500 points today. These rallies right here are a great time to scale out. Either scale out or scale down your positions in stocks. I'm telling you right now, it's a very good idea to lighten the load. This right here is, they're telling you, we're the Fed. This is what we've been trading for the past decade, is Fed activity, particularly the last couple of years. They're saying we're done. We're willing to sacrifice growth. Growth is not important to us. Yet somehow the NASDAQ goes up. That's definitely a false flag for sure. And it's a good time to use some of that strength to, inch yourself out of those positions. In my opinion, not financial advice. Do your own research. But if they say they're willing to sacrifice growth, we've been trading the Fed, there's only one thing that happens after that. I like reading this too, so I included this in there. They show you their statement and what changes. The Fed is so sad, to be honest with you. It's like, wait a minute. So they're using the same Word doc every time. They're basically saying the same thing, but you can see here there's lots of red in this one. So the statement changed a lot this time. Usually it doesn't change much. This time it changed a lot. So I think it's worth reading. It's worth reading. It's worth looking at it. Where did they change? What did they say? I'm not going to go through it and bore you with that right now, but if you want to check it out, this is the link for it. I will put that in the description. Here's something that's also a potential macro headwind is Russia or some of the countries that trade a lot with Russia. There may be currency issues because of the financial sanctions against them. There could be some fallout from that. It's a really, really, really big problem for Russia and their economy, what's happening with their currency. Very, very tough situation for the business owners there, for the citizens there, for the country just trading the stuff that they need there, food, etc. So this could cause some problems. And that's one thing I'm keeping a close eye on is what does the fallout from that look like? And does that fallout reach our borders or not? This is what I'm talking about. This is kind of the headline here. Really, home builders, they're saying that sales expectations drop dramatically as mortgage rates soar. And so they said sales expectations, not sales expectations. What are they basing those expectations on? They're basing those expectations on reservations. They're basing those expectations on people who have put down deposits. And I can tell you right now, I just got done with an email, a conversation, a new build situation for a veteran who's active duty right now, buying a brand new home, getting a good deal compared to the market, no question. But we've locked him, we've relocked him when rates dropped, and we got that. Remember when we got that sweet bounce right here? Yeah, that day right there, we relocked him and got him a great rate. So he's in great shape. Now, however, the builder is saying that they are going to be a month behind expectations because of supply chain issues, and they're asking us how much the rate lock extension is. They're going to pay for it. They're going to pay for it. Builders, let me just tell you, they don't want to pay for nothing. So the fact that they're like, yeah, we'll pay for the extension, that tells me something. That's good. This is good. If you're a buyer, if you've been waiting in the wings if you were like waiting for the market to soften, you might have an opportunity coming up here. You might have an opportunity in the coming weeks or months where the market might soften up a little. And if you were an opportunist, or if you're someone who hasn't been in the market, or who's been looking and just waited, didn't want to be in a bidding war, and you're on a bunch of new build lists, but they're not calling you, this is where you go ahead and you need to get locked and loaded. Be ready to go. Because when the time comes, it won't last long, I don't think. If there's a softening in the market, my personal opinion is if there is a softening, it won't last very long. There's so much demand, there's so much cash, and there's so many people who want real estate, especially if the stock market takes a dip, which it has been. It definitely has been. It's broken some important technical barriers, but you'll notice today, I think today is a false flag. We'll see. I'm somewhat rooting for the stock market because Bitcoin sort of tracks with it, and I'm so long Bitcoin, it's scary. And I'm short oil, which had a little bit of a bounce today, but I already took my cost basis out of that trade because it went up so much. I'm short oil, so made enough money to take my cost basis out and still have a nice position there to see what happens. Gold up a little bit today. See Bitcoin here doing decently. So Bitcoin sort of tracks with the market. So I'm short the NASDAQ, which we're still in the profit nicely on that one, even though we've been up 2 days in a row on the NASDAQ. And that's really just a hedge against my Bitcoin holdings. Oh, one other thing. So we're down. So inflation, it was yesterday. So if we look back yesterday, I wanted to talk about this. Rates got absolutely massacred yesterday. We had a huge gap down here, and then just lost ground all day. It was ugly. Went from here to here, okay? What was that all about? Because there was nothing going on yesterday. I'm sorry. Yeah, that was yesterday. There was nothing really going on yesterday except for what? Well, the inflation report, 10% increase year over year. Bonds don't like inflation. The fact that the Fed is saying that they're going to hike 7 times is proof that inflation is here and rampant. Also bad for bonds, and that's why you're seeing 2 days in a row, gap down pretty much all day. We did get a little bit of a buyer stepping in here, a little nice wick on the bottom there, which just shows us that there might be some support at this level here, at this 618 on the Fib chart. And these charts, of course, brought to you by mbshighway.com. Barry Abib and his son Dan Abib, they're running a good shop. So you can see that we're just kind of, there's nothing good on this. I'm talking about a wick here. That's all I've got. I don't have anything. I don't have anything positive to say. All I can tell you is that most likely this is going to keep getting worse. So lock your rates in as soon as you can. If you've thought about refinancing, if you want to refinance, if you want to quote, see what it looks like, let me know. Submit your scenario. Email me, text me, loan amount, purchase price, or home value. Home value, of course, if a refi. Your credit score, whether it's a condo detached. I'll tell you what rates look like. But don't look today. Send me the request today. Let's look at it tomorrow. Don't look today. Let the market calm down. Let the market settle in. Would not surprise me if the stock market is down big tomorrow and we get a little bounce back here. Okay, come back up to this trend line at least. That wouldn't surprise me. And that would be a better day to lock big time, because basically today they were pricing like this thing was going to fall off the earth. Because I think a lot of people knew or were thinking 6, maybe 7 hikes, but they just didn't know that the Fed would come out and announce that right now. Basically say, guys, you're on your own. Growth guys, stock guys, you're on your own. It's on you. Sorry. I always forget that this is up there. I think we get a bounce back up to, this is what I was saying, we get a bounce back up to this trend line tomorrow, possibly, and our best bet, our best hope for it, if we get a huge rally, would be up to here. But there's many things we have to get through to get to there. And that's the point that we'll for sure turn around. So good luck to us. One other thing I want to mention today is watch this episode, The Joe Rogan Experience with Sadhguru. Absolutely amazing. It's 1791, episode 1791. Sadhguru is just an incredibly wise individual, and him conversating with Joe is terrific. So check that out when you get the chance. There's Bitcoin up. Still running a little bit here. The daily candle looks really, really good. It's just very strange action here, although at the near support here in this channel, That's been working really well for some time. We'll see if that can hold. I'm still sort of hanging on to I don't know if anyone else has made this prediction, and I'm not just trying to be unique, but I do believe that it's possible this next leg up in crypto could be spurred on by, what's happening in the stock market. If the stock market really takes a heater, and it's because the Fed is no longer involved, a lot of these companies overvalued significantly, and money rolls out of there. Even if money rolls out of the stock market, we still have a record amount of household wealth. We still have extreme inflation, tons of money everywhere. And so if that's going to be the case, that money's going to have to go somewhere. I think a lot of it would go into real estate, and will continue to go into real estate. And that's one of the things I think we've got is a nice protection from a real estate perspective. I think a lot of that could end up going into cryptocurrencies as well. And so we'll see if this pattern continues, if we go back up and touch the highs of this channel or not. Hard to say if it will happen or when, but obviously we're hopeful because we're super long Bitcoin. So good luck to us. This real estate market is going to be tested. This is happening. Okay, this is not a drill. We are in the midst of it. It's going down. Buyers are starting to get payment quotes and go, man, rates are up a lot. Dang. They're and of course, how do buyers look at payments? Say, hey, I want to keep my payment at this much a month. How much can I buy a house for? So that's something that's being discussed now a lot with a lot of people, as it should be. Today, on days like today, we just have to remind people that, we're in a significant downtrend here. We have been in the short run for quite some time. There will probably be some relief somewhere. Will we get another bounce like this one? I don't know if we'll get another bounce like that or not, but we could. And if we do, this is where we're going to be headed, right here. And when that happens, be ready to pull the trigger. If you've been looking to refinance, I have a bunch of people who I've been quoting rates to for a long time, and every time I quote them, rates are just going up. If we get another bounce like this, you guys got to lock. You got to do it. Just trust me on this, okay? Trust me on this. If you get a bounce, I know when you hit refinancing, you don't have to do anything. You can just stick with what you got. But if you're paying more anyway, go ahead and lock in a lower rate. Just lock in a lower rate. Do it. Do it. Because we don't know when this ends. Someone asked me, how high are rates going to go? People ask me this all the time. And I think we could see the sixes this year. That's obviously a lot higher than what anyone would like to hear. But it's sort of like asking someone, like if we're standing on a mountain and it's cloudy and you can't see the bottom, but you roll a boulder down, like when will it get there? I don't know. I can't see. I don't know. I just know that the boulder's going to keep going down at that point. I don't know where that point is. I don't know where the ultimate bond support for mortgage bonds is. I really don't. But I do know that it will be somewhere. Will it be in the fives? Will it be in the sixes? Will it be in the fours? Well, we're going to be testing that here really soon. So this market is about to be tested, and we'll all get to watch in real time and see how it does. The last time the real estate market was tested in COVID, we had a couple of weeks where things were very soft. There were some significant opportunities. Some people sold their homes at the very bottom. And I'm sorry for those of you who did that. I really am. I mean, it's a real bummer. I've sold at the bottom before myself. It sucks. Will real estate rebound in the same way? There's a really good chance that it might, but it won't be crazy. It won't be crazy because there just won't be as much retail involved. If rates keep going up, more and more retail will disappear. More and more conventional buyers, FHA buyers will disappear. The VA buyers will actually be the last ones because they have the best loan. They have the lowest rate. They have no PMI. So they can do 100% financing. They're going to qualify for more. The VA buyer is the last one to leave the house. And I'll know when we get to that point in the market. If we start to see that tip over, if that happens, I'll know. Because I have a lot of VA offers that go out every weekend. And if we start getting tons of callbacks, I'll know what's going on. Right now, we have to fight. We have to fight for callbacks. We have to fight for position in the pecking order. And if that starts to change, then that'll be a sign. That'll be a sign. So I'll keep you posted. And just a quick reminder here. Let's do this. If you want to know what it looks like, I'll tell you. It's a bigger scenario. email, text. I just need loan amount, purchase price if you're purchasing, home value if it's a refi, credit score. Let me know if it's a condo or detached. I'll let you know what's up, okay? Even if you're not in one of my states, it's okay. I'll still tell you what's up, what to do. Talked to a guy from Georgia this morning. Told him what's up, where to go, and exactly what bank to get set up with for a long-term lock on a new build. I'll hook you up. That's what this channel is all about. It's all about trying to hook you up. You take the time to watch this, I'm going to hook you up with information. All right, guys. That's it for today. Have a terrific evening. I will be back soon.